Now, there's one insurer that's got a trauma policy on steroids.
This insurance company needs to take your recommendation. We need to call it trauma reinstatement on steroids and put that in the PDS.
What happens if I claim once? Does the policy just disappear, or can I actually put it back into force? And so with the majority of insurers, the answer is yes, you've got what's called a reinstatement benefit.
A lot of young people, their claims actually skew towards accidents.
You know, one of the biggest challenges that insurers face is making sure they are sustainable long term. And so that basically means not running out of money.
Wow, that's a not fun fact.
No.
Yeah, I mean, it's fun fact, but it's not that great.
It's a fact.
We work in insurance, so almost every fact that we talk about is not very fun, but I still call them fun facts.
So marriage is one of those, but in brackets after that it says one time only. So you can't get married 7 times and utilize the benefit 7 times.
All right, so Matt, why did you pick this topic?
It was one of the things I thought about when I first started, as in, you know, there's some of these really significant benefits that could really, really be tailored to certain people. But, you know, how much time should we really spend trying to get these maybe smaller benefits, you know, on someone's policy when they'd be better off just having cover in the first place? As we go through some of these, they might sound really cool at the beginning, but then as we talk through it, you'll see why we maybe don't spend a huge amount of time tailoring our recommendation based on these tiny features for each individual.
Yeah, that's right. And when it comes to insurance, if we had a crystal ball and we knew what people would claim on, then we would pick the right recommendation based on that. And now we use statistics and we try and understand broadly, you know, what are some features and benefits that are going to be claimed on. But yeah, these features are important. But at the end, we'll talk about, you know, why is it that we don't actually just recommend the policies that only have these features? So first up, talk to us about what's the feature that you want to talk about first.
Yeah, so in no particular order, we've got a couple to go through. So the first one is what's called a cancer plus, or a modular crisis benefit. So a lot of the time people think, oh, you know, I've got a heart condition, or maybe I've had some form of cancer or precursor to cancer, trauma, that's what it covers. So things like cancers, heart attack, stroke. So cool, I've had this, I'll never get cancer, never get trauma. Whereas one insurer has actually got an option for that. So they call it modular crisis, which is the other name of trauma, which essentially, if you've had a particular type of cancer, they can actually look at that and make a special assessment and go, cool, we can offer you the regular trauma contract with everything there except cancer conditions. Or on the flip side, if you've had a heart condition, then they can offer you everything they normally would, minus any of those heart conditions. So it comes with a small discount on the policy, but it's really good for those where the majority of the other insurers are just saying flat out, no trauma cover. You can at least get something. Sure, it's not going to cover maybe what you're more likely to suffer from or have suffered from in the past, but all the other conditions is probably more important to be covered for rather than have nothing.
Yeah, and sorry, I didn't talk about it at the start of this video, but we're not going to mention the insurance company's name. We're going to try our hardest not to mention their names because we don't want anyone to walk away going, oh, AIA or MetLife or TAL or whatever is the right insurer for me because I like that feature, because there are so many things to factor in when it comes to, you know, the cost of the cover. Well, you know, this feature may be available that may be better than in other policies, but if the overall premiums are going to be twice as much, well, it doesn't make sense to get this niche feature. So we're going to try and refrain from talking about the insurance providers. It's going to be hard for you and me, Matt, but we'll do our best. The thing about that, you know, we talked about maybe we wouldn't recommend someone go into this product just for that, but that's an instance where, given that we do a lot of that medical assessment up front, we actually may recommend that policy for an individual client because of that health history.
And, you know, I've had clients before where it was the only option because they had a particular event, and like I said, all the other insurers declined trauma flat out. So it was something versus nothing for that particular client.
All right. Now, the next feature is insurance company Y. They've got multiple reinstatements. Talk to me about how this works.
So yeah, a really common question is, you know, what happens if I claim once? Does the policy just disappear, or can I actually put it back into force? And so with the majority of insurers, the answer is yes, you've got what's called a reinstatement benefit. Some are built in, some you have to pay a little bit extra for, but most have the ability to claim once on one thing, and your cover disappears for 12 months, and then you can put it back into force and claim on something else that's unrelated to the first one. Now, there's one insurer that's got a trauma policy on steroids. So they and most insurers will break down the 40 odd conditions covered into categories, general categories, so cancers, heart conditions, neurological, etc. This one, they are very sort of segmented. So how they do it is if you claim under that cancer segment, then the cancer segment's gone, but everything else is still there. So for the next 12 months, the policy's not there. You may have the ability to claim on some of the accidental sort of really, if you suffer an accidental injury, but then 12 months later, it comes back into force and you can claim on. So if you've claimed on the cancer, you've got your heart conditions, your neurological, your accidents, etc., that you can claim on. And so basically, if you claim on one, it drops off, but the others are still there. And there's extra special about this is normally anything to do with the original condition. If it's in that same category, you'll never, ever have a chance of claiming a second time. If you choose the right additional options to add onto the policy, you can claim a second time the full benefit for an unrelated cancer diagnosis. So 2 different cancer claims.
Bringing that back to the normal policy is if you have like lung cancer, let's say, which I think is statistically the most, the highest diagnosis in Australia. Did a little bit of research the other day. I could be wrong. So ignore everything I say other than specific policy features. But let's say someone has lung cancer, they get a claim. They're totally healthy. In the future, if you get prostate cancer, most policies will just say, well, cancer is cancer. So we won't pay out again. But you're saying that this special insurer Y, will pay out for those separate cancer events.
Yeah. So you've still got to, make sure you're within those timeframes. So there has to be 12 months in between. If you have, a similar or a connected cancer within that shorter period, you can get a little bit, but not the full benefit. So if you're unlucky enough, in a way, to have these diagnoses, 5 different ones, and cancer twice, you can get, say you've got 100,000 in trauma, you can get paid $600,000 in total.
Yeah, cool. Well, thanks, Matt. I think this insurance company needs to take your recommendation. We need to call it trauma reinstatement on steroids, and put that in the PDS. So I like it, and I'm petitioning that insurance company to make the change. So the next thing we want to touch on is accident only cover. So talk to me about what that is.
Yeah. So if you're an existing client listening, you may have heard of this before because we use it fairly regularly. Now, this one, so typically income protection and TPD, if you are working and you get your cover and you suffer an injury or an illness, so you're medically unable to work, that's when you're claiming on income protection and TPD. Now, this particular type of cover is if you suffer an accidental injury that leads to you being unable to work. That is when you're able to claim. So it does not cover illnesses. So, okay, why on earth would we recommend this? Well, unfortunately, a lot of insurers have a 3 strikes and you're out sort of risk tolerance. And so if you have 2 exclusions and maybe a 100 or a 75% loading for, BMI or something else, instead of just getting 10 different exclusions, you'll get to those 3. And then if there's another one or an extra loading, the insurer will actually decline to offer those income protection or the TPD benefits or limit them. So shorter benefit period, that sort of thing. So this is an option that we use for people where their previous medical history, we've pre-assessed and found that they actually can't get the full income protection and TPD, which covers them for accidents and injuries and illnesses. This is just for those people where the alternative to accident only is not having any income protection or TPD cover.
And the reason why this is important is because a lot of young people, their claims actually skew towards accidents. So as you get older, you've got more diseases, you've got more chronic illnesses and sicknesses like that. But for young people, especially young men, most of their claims are accidents. It is unfortunate not being able to get full cover. It isn't as good as full cover, and we all kind of acknowledge that. But sometimes, as you mentioned, full cover isn't available. So accident-only cover does, help in those situations. And there is only a few insurers who offer it. And really only one that we kind of look favorably towards, because the other ones makes it so much harder to get cover for. Is there anything else that we haven't touched on? And you can get accident life insurance as well, but life insurance is much easier to obtain. It's pretty rare that someone gets fully declined for life insurance. And so that's why we often don't use the accident-only life cover option, but we have used it in the past.
Yeah, that's why I didn't spend too much time on that one, because it's quite rare, and that's when things are really tough, is when accident-only life is, the only option for someone.
Anything else on accident-only you want to touch on?
No, unless you wanted to go through the definition of what that particular insurer deems to be an accident or an injury.
Yeah, let's go, mate. Well, this is a deep dive. The whole purpose of these deep dives is to go deep, and so let's go.
Cool. So, when we talk about that, the next question that often comes from clients, okay, what's an accident? What's an injury? So we always send out a flyer that comes with this insurer. And so an accident is defined as a single, unintended, unexpected, and sudden event which occurs while the policy is in force. And an injury is defined as a bodily injury that occurs while the policy is in force. Also includes an injury which was fully disclosed to the insurer and was accepted as part of the application for cover. So injury does not include mental health symptoms or disorders that directly or indirectly arise from an accident.
And not many people getting hit by a bus or having a shark bite their leg is anticipating it to come. All right, next feature, benefit. So insurance company, let's choose another letter. Insurance company A. No, actually, there is an insurance company that starts with A, so I won't use that. Insurance company B. Has a family benefit. What are we talking about here?
Yeah, family benefit, or they from PDS to PDS, they've changed the name, so it's also potentially known as a career break benefit. So this one's pretty cool. If you are planning on having children, it often comes with, typically in mums, they take more time off for the kids. So really common question is, okay, I've got income protection. What happens while I'm on leave? Like, are they just going to not pay me, or because I'm not technically at work? So most commonly, your options are leave everything as is. So your policy keeps going. You keep paying for it as you usually would monthly or annually. And if you were to claim, provided you haven't been on maternity leave for longer than 12 months, then they assess you on your income prior to that disability. The alternative to that is you pause your cover. Now, provided it's been in force long enough, so you can't kind of take it out and then 2 months later put it on pause, typically has to be a year or two, you can pause your cover. So there's a pro and a con to that. Pause, you're not paying for it. Fantastic, free cover. Problem is, you also can't claim on it during that period of time. So it is a bit of a tough decision to make. Do I want to pay for this cover and claim on it, even though I've probably reduced my income during this time? Or do I want to take the risk of pausing it, saving the money, but then if something happens during that time, potentially get nothing? So this benefit from Insurer B is just, it allows you to it's not just one or the other. You can actually, based on, so say maybe you're planning on having 2 or 3 kids and you go, cool, I don't want to have them back to back to back, so I might take 5 years and I'll go part-time during those 5 years. So rather than pay for all of this cover that whole time, or have no cover during that whole time, you actually choose to reduce the sum insured for some of your benefits during that time. So that more accurately reflects what you'll be paid based on working part-time hours. And so you pay based on how much cover you've reduced it to. So you're not paying everything, you're not paying nothing, somewhere in the middle, and your cover level is closely based on what you're earning. And then after that 5-year period, that is the max that they allow. You can basically boost it back up to what it was, no medical questions asked, and you carry on as you were before.
And I think that's one of the biggest benefits of it, is really being able to pause it for a long period of time, so that you can do it up to 5 years. But it means that you don't need to go through underwriting again. This is the biggest question we have with clients, or the biggest conversation we have with clients when you do have career breaks, parental leave, whatever that looks like, is, if I go and cancel my cover, then if you have a medical event in that time, yes, you may not be able to claim on it, but it may impact the ability to increase that cover in the future, or take it out again in the future. So that's always the hesitation with just cancelling cover, because it's not, anyone who's gone through the application process knows it's not a simple, tick the box and I get insurance. You've got to go through all these health, history questions, and that may lead to an exclusion, a loading, or declining of cover, as we touched on. So these pausing options that allows you to pause for a long period of time is really beneficial for those type of clients. All right, next feature benefit is the female critical illness benefit. Now, we did do a deep dive with Azaria on a lot of the features and benefits that some of this insurer provides, but let's touch, this is insurance company X. I did my research, I wrote down some other letters that aren't used. So insurance company X, they get a female critical illness benefit.
Yes. And there's also a new insurer on the market that offers it.
Yes, there is.
So they've done the old copy and paste by the looks.
Yeah, I'll clip that and send it to the insurance company.
Zara did a very informative comparison on her LinkedIn where she showed them side by side, and it was interesting to see the zero differences. So yeah, but now there's two insurers that offer it. So essentially, it's some of them relate to pregnancy complications, and then some are for events that are more likely to be suffered by women. So there's not a huge amount of those, but benefits sometimes referred to as the pregnancy complications benefit. So essentially, you can get up to 20% of your trauma benefit paid, up to a maximum of $50,000. So that's if you've got more than $250,000 in trauma cover. And there's not a huge amount of conditions covered, but yeah, maybe it's worth looking at if having a family is something, or maybe there's some sort of family history where you're concerned about some of those events that are listed there. So some of the pregnancy complicated relations like eclampsia, stillbirth, or an ectopic pregnancy. There's congenital conditions as well, so like Down syndrome or spina bifida. And I think there's another one, tetralogy of Fallow, which is a very interesting, it took me a while to learn to pronounce that one.
Yeah, congratulations. Azari and me had no idea how to say it when we did the recording months ago. So you nailed it.
Yeah, thank you. Well, who knows? I could be wrong. That's how I think it's pronounced. And then, so the other ones that are more tailored to women because they are suffered more often is lupus and severe osteoporosis. So I looked at that this morning. Lupus is actually apparently suffered 10 times more often in women than men, which I had no idea about until this morning.
Wow. That's a not fun fact.
No.
Yeah. I mean, it's a fun fact, but it's not that great.
No, it's a fact.
But I mean, I guess we work in insurance, so almost every fact that we talk about is not very fun, but I still call them fun facts. Yeah, so I mean, it's good that another insurer has copied and pasted it. These are benefits that are pretty rare, and again, we talk about we will touch on this in a bit more detail, but why don't we recommend this insurer? Like, you think about the likelihood of this claim and the overall premium, like differential. So, if this is, all the benefits ever potentially claimable on a policy, if this will make up like 2% of that, then you got to think, well, do I pay, if the premium is 10% over and above the other insurer, is that something I'd want? If I'm, a young woman who is pre-babies and has plans to have babies, then maybe we skew a little bit more that way. But it is very difficult to really assign a cost. The cost is the cost is the cost. We know that for certain. What we don't know for certain is the future claims and what people are going to claim on. So that's why it is sometimes hard to recommend leaning towards these features.
Yeah, and just to kind of add to what you're saying, we don't know what it's going to be, and the percentages end up so small, but the conditions covered aren't that many. And, we hope that no one ever has to even consider needing to claim on those, because if you do look at what is covered, it's not good. You don't ever want to be close to that. But if you happen to be in that position, that benefit could be very beneficial. So not about getting the money because something's happened. It's, cool, what does that then allow you to do? Do you need to take a year to recover mentally from those things happening?
Yeah, exactly. And we've had clients who have had ectopic pregnancies, and I've had people close to my life who have had stillborns. So these things happen, and it's beneficial when you have the policies. And at the time, someone close to me had that. They didn't have a policy that covered these, and so it's not going to change their life, one way or the other. But it is just nice. And it's just a reminder that if you have these policies, just reaching out to the advisor and say, hey, this thing happened to me or my family. Is it covered at all? Because there may be some really funky features in the policy. And we aren't talking about the insurance providers because they may change these features over time. And so we don't want someone to set up a policy in 12 months' time based on these things. But it is just a great reminder that there are some nuances with these policies. All right, so next thing we are going to talk about TPD, severity-based TPD policies. So touch on, let's go insurance, D&G.
Awesome. So these are just two, and I think there will be more coming out. It's a topic of discussion amongst insurers. So, one of the biggest challenges that insurers face is making sure they are sustainable long term. And so that basically means not running out of money. So how do they fairly price their policies without just making things so expensive that no one ever actually takes any cover because it's just so ridiculously expensive. So there's been, especially with TPD, so income protection, there were a lot of changes back in 2021. TPD is now in the spotlight. And there's already a few options. So you've got your own occupation, your any occupation, you've got modified or home duties, or you've got activities of daily living. But there's more options coming out. So
if those options weren't confusing enough, which they are, we've got more to come.
And so that's what we call them. And then there's different names between each insurer too. So, I'm just going to call it TPD severity for the sake of it. It may or may not be what the most recent insurer to introduce it has called it. But essentially, this is somewhere in between the any occupation definition for TPD and the activities of daily living definition. So any occupation, can you do any job you're reasonably able to do based on education, training, or experience? And the ADL, or the activities of daily living, is, okay, you can no longer do two or more of these activities of daily living without assistance. So can you get out of bed, feed yourself, dress yourself, go to the toilet? That's pretty severe. So these new options are based on, so there's kind of two ways you can go about it. There's 30% of whole person impairment. So rather than of these 6, can you still do all of them, or can you no longer do some of them? There's also, and I'll read off the definition here, a permanent score of greater than 30% on the psychiatric impairment rating scale due to a psychiatric disorder that has been diagnosed by a psychiatrist and is defined in the Diagnostic and Statistical Manual of Mental Disorders current at the date of diagnosis. So it's more on just a specialist or medical professional's opinion of, okay, you've suffered this event. Now, how disabled are you? Or how much function have you lost, either physically or mentally, rather than just this very small, can you dress yourself or feed yourself? Because maybe you can still do those things, but day to day, you're still suffering. But you can do those things without assistance. So just a middle ground between those. Well, one's an extreme, one's just a regular definition.
And I think with these policies, we will wait and see what all the insurers come out with, and we'll do a deep dive on the nuances. When income protection changed in 2021, there was like, over the next 4 years, there was literally, I think I heard, there was like over 100 different changes across the different providers. They kept on changing, little things here and there. And so it's very hard to keep on top of when these things come in. Insurance, for any consumer out there, insurance companies, they bring out a new products. They hope everyone else brings out it as well. And then they just change it to be exactly the same as everyone else, or around about the same. And so it will be interesting to see once these come out. Now, I'm going to throw you on the spot here, Matt, because I know you haven't prepared this one. Okay. There's an insurance company that has a product that is called Active.
Yep.
Now, talk to me. That's very different to the market. I don't believe there's anything else on the market like this product. So talk to me about how it kind of works and functions. And the reason why I'm bringing it up now, because it's similar-ish to the severity products when it comes to TPD.
Yeah. So, I mean, with this TPD, it's total and permanent disability. So it's one type of cover. It doesn't encompass, the trauma or the income protection or anything. So Active it's almost like an all-in-one. So you don't really have the separate life. This is your life policy. And if you claim on that, that's how much you get in TPD and so on and so forth. It's just a long list. And so if you suffer one of those listed events, or if something happens and it means you're unable to do certain listed activities, then you can actually claim on this Active cover. So you take out a top line level, say $2 million, and then there's just a big old list. I think there's 168 different ways to claim. And if, depending on where you are, you can get either, I think it's the D, C.
I think it's A, B, C, D, and E.
Yeah, I was trying to
I believe it goes up to E.
Yeah.
Yeah, I don't know why
It
you were
goes
going
up to
backwards,
E.
but that's okay.
But yeah, so A category is 100%. A B category is 60, and then I think it's 25, 10, and 5%.
If that is right, I'm going to be disgusted with how well you know that product, because that is incredibly impressive. I actually can we make sure we get a clip of, I want to see the numbers on the screen when this comes out live, because if Matt's wrong, I will be happy. Because he would be an absolute psychopath to remember that exactly. But if he's right, I want to give you your props, Matt. So yeah, it's percentage based.
Yes. So I don't know how deep you wanted me to go, but I'm going as deep as I can.
No. That's enough. I was like, I want you to excel and be the best you can be. But a part of me was like, I kind of want to throw him under the bus with this difficult question, and you just nailed it, which is a little bit disappointing. But I guess that's what makes you such a good advisor. So well done. Now let's move on to insurance company. I actually wrote down, while we were talking before, I was just writing down letters to work out which ones are safe. Insurance company M. Now talk about like forward underwriting. What is it? What's the concept of it?
Yeah, so forward underwriting, and it's it's not a crazy concept, but most of us, we're the healthiest we're ever going to be. We're the youngest for sure that we're ever going to be. And when you go for an application, you're getting assessed today based on your age and everything about you today. So that's all well and good. But what if today I only need this was actually my situation. 23 when I first got my real job back in the days. And so I didn't need a huge amount of cover at that point. I was single, didn't have a house, I was renting. So, same sort of situation that a lot of people say they're in. I don't have any dependents or anything like that. So why would I need huge amounts of these covers? So I got a lot of trauma at the time. I got income protection based on my income at the time. But then life and TPD, typically you need more of that when you have a family or have dependents or have a mortgage. So this forward underwriting, I suppose, gives you the option to go, okay, I'm 23, I'm young, I'm healthy. I don't need a huge amount of cover today. So why would I take it out just to get the terms that I want today? Because I don't have any health conditions. So you tell the insurer, hey, this is how much I think I might need into the future. Underwrite me today as if I was applying for those. So you'll go through the standard process. Now, depending on how much cover, that may include some mandatory medicals. Otherwise, if you're not going for crazy numbers, it might just be the standard, hey, answer these million questions and we'll make a judgment off the back of that. And so what that then allows you to do is, rather than pay for all the cover you ever might need for the rest of your life, you take out what you need today, but you underwrite for the full amount that you may need into the future once you've got kids and a mortgage and maybe whatever else you want to protect. And so you've gone through all the hard stuff, because that's arguably the hardest, most annoying part of getting insurance is all the medical questions and potential tests, etc. So you do that when you are young and healthy. And then when those events happen in the future, that then triggers an event under the policy where now you can go, cool, 25% of this pre-underwritten or forward underwritten cover, you can now activate. And it gives you that option to add it onto your policies. So maybe I do it when I'm 23. By the time I'm 28, I've got a house. And so, cool, 25%, I'll add on some extra life and TPD, or maybe I'm doubling down on trauma, add some more trauma cover.
And, as a self-confessed trauma nerd, yes, you will. Yeah.
And so that way, for the first 5 years, I've kind of locked in that health from when I was 23, but then I only really start paying for that whole benefit once I need it at age 28 when I've got those things.
So a lot of people thinking will go, well, why doesn't every insurer allow that? That kind of makes sense to forward underwrite. And when I was young and smart and went to insurance companies and say, hey, we should allow this for everyone. You should allow everyone to underwrite it, whatever cover they want, and then dial up and down according to that band. And then when you dial down, maybe you're paying like 1.5 times the premium of that lower number. We can scale it some way. And the insurance companies came back to me and said, well, how does it make sense for us as an insurance company? Everyone will max out their level of cover at whatever, 5 million or 2 million, and then just bring it down to $500,000. And then, just before they have an issue or incident, they just dial it back up. And I was like, that makes a lot of sense. Maybe I'm not as smart as an actuary. But that's why they don't all offer the cover. And this is why we are talking about it, because it is a special feature where they are taking undue risk allowing this, but they're obviously pricing it in and managing it that way.
There are still limits on that. So, I can't just forward underwrite and then go, okay, 23rd of March, future year, insert here. I want more cover now. It has to be triggered by one of those events. So, marriage, having a child, buying a home. So they have some protection in that case where I can't go, oh, I've had some weird pains recently. Let me max out my trauma cover now and then go and get my diagnosis, knowing that I've forward underwritten. I still have had one of those life events before. And there's questions there and it says, look, if you are intending or claiming on one of these things, then maybe we won't add on this extra cover, which is probably fair.
And it is similar to like guaranteed future increase, which we have done a deep dive on that. But it's not exactly the same because the guaranteed future increase has also has some limitations with some of that stuff and caps and whatever. Back to because I did some research on this other insurance company. I don't forget what letter we used. Let's say G for this active cover. What percentages did you say before?
100, 60, 25, 10, and 5.
Fantastic. You're wrong.
Okay.
It is 100, 65, 40, 20, and 5.
65. Okay. Maybe they've changed the PDS.
Oh yeah, I get you. You are going to spend the next hour and a half researching in the last 20 years. Have they ever updated the PDS to increase those numbers based on what you thought it was?
No, that's good. I'll take that.
Yeah. Okay, so again, back to the original question. Why don't we just recommend based off these features? Is there a reason why you wouldn't?
Yeah, so, well, one, all of those that we've talked about are with different insurers. So unless you wanted to take all of the cover or a small amount of every type of cover with every type of insurer, you can't actually get all of those features. Second of all, we've kind of alluded to it earlier, but a lot of them are nice to have. So sure, it would be nice to somehow know that maybe I'll have future health problems, take it all out when I'm 23 and just add on some cover right before future medical events that could have led to my claim, or knowing how long I'm going to take time off for having kids. But we don't know, and they're not those must-have benefits. So that's something you kind of talked about at the start, is the majority of the must-have benefits are offered by a lot of those insurers, and they're very, very similar. So do we spend hours and hours and hours digging into each and every single benefit, or would we be benefiting the majority of people by spending hours and hours on every person, reading through every single feature and doing a pros and con list for everyone? And we probably wouldn't be. As long as the majority of people have really good cover, then some of these nice to have benefits are just sometimes either not worth the extra cost that comes with them, or we don't know if they'll ever actually need them. And we don't have that crystal ball, because if we did, it would, one, make our lives very easy, but two, we probably wouldn't need to work because, hey, I'd just be reading palms and who knows what else instead of sitting in my...
True. True. I think the other thing is the things that really influence our recommendation decisions is, number one, underwriting. So based on your health history, that's where we will recommend an insurer. So, let's talk about that, family, like that pausing feature. If you have a family or career pause feature, like if that insurer is going to exclude mental health and another one is not, then again, I'm sorry, that's probably not as beneficial, given that 25 to 30% of all claims are for mental health at the moment. So we can put a really clear number on that, and if even more if you've had a history of a mental health event, condition, whatever it is, and someone's willing to offer you cover for mental health, well, that far exceeds these niche benefits. The other thing is pricing matters. Like, there is a huge price disparity between insurers. So one insurer may be literally half the price of another insurer. Personal insurance is not like home loans, where you go to a home loan provider and the interest rate will be within the margin of 1%, up or down, and that's probably even generous. If you're looking at the top 20 banks in Australia, if they're outside of 1% difference, I'll be shocked. Insurance policies can literally be 2 to 3 times more expensive with one provider versus another. So that has a really big impact. Underwriting first, pricing second. These niche benefits are really, as we touched on, nice to have and important that we know. But even that, it's one of these things we don't expect our clients to know these niche benefits. That's why it's just a really important to, if you're this far into this deep dive, thanks for watching, because this is probably one of the more niche topics that we've had. But it just is a great reminder that reach out to your advisor if you do have any questions or you do have any health events. And we have it all the time, people reaching out to us. And sometimes the answer is, unfortunately, your policy doesn't cover that. And sometimes really, really severe life events are happening to our clients and their policies doesn't pay out on it. And it's not because the insurance company is, declining it and when they should pay out. It's just these aren't what the policies cover for. And so, it's just a great reminder going through this video, reach out to your advisor. Any life event happens. Maybe getting engaged, congratulations, maybe not super important. But actually, that said, as I'm saying that, you can access some of these future increased benefit options. So maybe, as soon as you get engaged, send us an email. We want to celebrate with you, and then talk about the potential to increase your insurance.
On that though, as I was reading through this morning, so marriage is one of those, but in brackets after that it says one time only. So you can't get married 7 times and utilize the benefit 7 times. So
that's great. That's a good. It provides Katie and Kate, both of our respective wives, a bit of certainty, and it provides us, if this is dark, but if they ever come to us and say, "Hey, I'm thinking about splitting up with you," because I would never break up with my wife because I love her and she's the best. But if she ever did to me, my last ditch effort will be, "Hey, you can't increase your benefit again on your insurance policy." We'll see if that keeps us together.
Yeah.
Again, we got dark. I'm sure this will get cut at the end of it. But all right, Matt, thanks heaps. Is there anything else that you want to finish on that you think is important for people to either remember or anything we haven't touched on?
Just, you're talking before, if you've got cover, reach out when life happens. But also if you're getting cover and there's some sort of benefit or feature or, something that is a must-have, a non-negotiable for you that you want on your covers, mention it and see, well, 1, does this exist? And then 2, is the insurer that has it reasonable for me? And that's what advisors can do if you, for some reason, have read through a product disclosure statement.
Yeah, multiple product disclosure statements.
Yeah.
And I dare say not everyone's like you, Matt, and reading through these things. But if you just think like any feature or benefit you may have ever heard of, go, hey, is this what it covers for? And then, with our advice documents, we do show what the cost considerations are with other insurers. We do show the underwriting considerations. So it's just a great reminder to work with your advisor and go, why did you choose this policy for me? And your advisor, any reasonable advisor will be able to really clearly articulate, we chose this one over the others because of A, B, and C. And this is why we think it's important for you. Awesome. Well, thank you, Matthew. I appreciate you taking the time, doing all the research and jumping on today.
Cool. Thanks, Phil.
Now, if you like that deep dive, we'll have others up on the screen now that you can check out. And I'm sure you'll be racing to watch Matt's other deep dive on trauma so you can learn more about how Matt is a trauma nerd. So thanks heaps for watching. See you next time.